We're going to be going over a lot of day trading concepts, a lot of swing trading concepts, even long-term investing. And I kind of want to just go through my strategy and exactly how I go about the market every single day. When I wake up, what I'm looking for, my entries, literally every single thing, because all of these concepts are very important. You have to have a plan when you're trading. You have to go step by step, and I'm going to show you literally every step for my trading strategy, my entry, what I'm looking for. And then I did add a little bit of risk management in here for anybody that needs help with a smaller account. I started a 3K risk management little blueprint down there that I wrote up today. So for like a small account, like a $3,000 options account, this is going to be really helpful for you guys to actually understand how to manage your risk, what to do in, you know what I mean, certain situations like position sizing, stop loss, and all of that type of good stuff. So yeah, let's get into it. How do I use this thing? This is like the first time I really started using this. What is it? Miro. There we go. So first thing I want to get into is basically the purpose of this class is to provide a clear, repeatable framework for you for trading breakouts in the stock market using both swing trading and day trading approaches. The strategy is not based on just predictions or opinions or just trying to get into the market to make money and just hype, right? It's built more of a, how can I explain it? A systematic principle approach, right? You're doing the same thing every single day, and it doesn't matter how you feel. It doesn't matter your hopes or literally any of that stuff, right? It's a simple, systematic approach. That's all, right? We look at strong stocks that tend to move sideways. They go sideways, they consolidate before they make that next big upside move, and that big upside move, that's what we want to catch. Super simple. It's basically just called a breakout. I promise you guys my strategy is like one of the most simplest strategies you'll ever hear. It's not like any of these complex strategies. Trading is already hard, man. Like trading is probably one of the hardest things I've personally done in my life. So why make it harder, right? I think that's very, very important. So by identifying these periods of consolidation in a stock, you want to align your entries basically right after the breakout happens out of the consolidation area. And we'll go on the charts. We'll show you some examples and all that type of stuff. This blueprint is going to focus on structure, discipline, and execution, which are the foundations of long-term consistency in trading. It's not just trying to be right every single day or making a lot of money right away. It's how to compound your account, your portfolio, and your trading over a long span of time. That's the goal with this, right? I'm personally not a day trader like for 100%, so I'm not just trying to be right every single day trade to make a lot of money. I want to compound my account over time, and I think that's what everyone's goal should be. So before I ever look at individual stocks, the market comes first, like QQQ and SPY, right? I want to know if QQQ and SPY is in an uptrend or a downtrend. So with my strategy, like literally the number one thing with swing trading, mind you, that's the first thing I'm going to be going over is swing trading. With swing trading, you can see we mainly look at the tech index, which is QQQ, and then you do have the S&P 500, which most of you guys know is SPY. If we look in the summer, after that April dip, right as the summer started, you can see we were on a huge bull run this year in 2025. An insane bull run from June to like late October. We absolutely ripped. Now, in a swing trading market, when you see SPY, QQQ in a bull run like this during this time period, you're going to see a lot of individual stocks making those same moves and making even bigger moves. So if we just go to a stock like IREN, this is a stock that I do like. Look at this move right here out of this breakout. I marked this out for you guys right here. You see it's a tight consolidation area. It broke out on the daily time frame. Bang. All you have to do is enter. You put your stop loss at low of day and you let it fucking ride. Look at that. That's over a 1 to 27 risk to reward. That means if you gave a homeless dude $1, he gives you $27 back. Are you going to do that? Fuck yeah, you're going to do that. You're going to give it to him right away, right? Why would we take something that's not a good risk to reward? If it's not worth it, there's no reason to do it. It's simple as that. So you can see in the summer, in these time periods, August, September, these stocks are absolutely ripping. Even look at, let's say, Tesla in the summer, in August, September. It ripped. I made $25,000 on this stock. SoFi, absolutely ripping. So you're going to see a lot of tech stocks and a lot of individual stocks move when the market is in an uptrend. So what I'm getting at back here when I was talking about before I ever look at individual stocks, the market comes first, I'm always looking at QQQ. So if you guys see this right here, what has QQQ been doing this past like month to start of December. I'm not going to lie, the price action has not been the best. And this actually hasn't been my best trading months. I've been pretty slow with my trading. I haven't been full size, especially because I've been traveling to New Jersey and I just wasn't really confident. So in this type of market, I was not swing trading with a lot of size. I was taking it more slow because I was getting stopped out a lot and a lot of my stocks were failing and I was losing money. So what happens? I slow down, I wait, and I stay hands off. What I don't do is keep putting money into the market, keep, you know what I mean, just pressuring myself to make money. No, because it's not about making money every single day. We're not just day traders. Listen to this. I promise you, when you're just trying to day trade every single day and try to be right every single day, you may have a harder time becoming profitable because you have to be right a lot more of the times. But with swing trading, it's not just linear, right? It's not just a straight line. You're not just going to make money, make money, make money. There's going to be time periods in the market where the market will slow down. So what does that mean? That means you need to slow down and you need to adapt when the market is adapting as well. You can see it went out from a huge uptrend in a bull market into a small correction right here. The market was slowly pulling back. It's not a huge correction, but it's some periods of time where there's going to be like consolidation and you just got to sit out so you don't lose money. And then what happens when the market picks back up and it starts breaking all-time highs, it has a lot of momentum, that's when you put your foot right back on the gas pedal, you get right after it, and then that's when you size back up and you make money. Super, super simple. So QQQ, when I'm trading individual stocks, I look to see if this is in an uptrend. You could see Friday, pretty red day, and we were losing the moving averages. I use the moving averages every single day as key support and key resistance for my short-term trading, right? So when you see QQQ losing the moving averages, you're going to see this go back into a downtrend, and we're going to get into the moving averages and what all that stuff means. But you can see once this starts breaking out, that's a swing trading market, and that's when you really want to put your foot back on the gas. So when the market is strong and holding key levels, I'm more willing to swing trade and hold my positions longer so they'll make me more money because we're in an uptrend. When the market is choppy or weak, I size down. I'll even day trade a little bit or, you know what I mean, just swing trade with light size, or I'll stay cash. One thing a lot of people don't understand is cash is a position. What does cash mean? Cash means you hold your cash, you stay greedy, you don't give it to anybody or put it in the market. Staying cash is still trading. Remember that. For any of you over traders in here that keep fucking yourself over in the market from trading too much, always remember that not trading is still trading. There's times where I come into the week and I'm just like, guys, I'm not trading today. This shit is ass and titties and there's no reason for me to take a trade, right? I keep it straight up with myself. I don't try to overtrade. I don't need to get rich in one day. Keep it straight up. This price action's ass. I'm stepping away. If you can become a disciplined person and do that, you will make a lot of money, I promise you. Now, I keep my setups simple on purpose, right? A breakout is very, very simple. It breaks out or it doesn't. Very, very simple. I don't trade everything and anything for no reason. I'm not trying to catch a falling knife for a bounce when a stock is falling. I'm not, you know what I mean, trying to stop a rocket ship when a stock is ripping, and I'm not going to take puts for no reason. I'm not going to trade FOMC, or I'm not going to trade NVIDIA because the owner freaking made money this year, or whatever the case may be. I don't trade off of just any random fundamentals or any of that stuff. I keep it straight up simple, and that is how I'm able to make money, and that's what's going to make me millions and millions of dollars in the future. You guys are going to see me. I'm one of the most confident youngins out there. I'm going to be one of the best traders you guys will ever see on Instagram, TikTok, YouTube, and I'm going to track my whole document my whole journey. Excuse me. And it's very important to document your journey. So write down your goals, write down your journals for every single trade you've taken. Journal every single thing you do. Be confident in yourself and be convicted in your strategy. Very, very important. Most of my trades come from either bull flags, tight ranges, or wedge style consolidations. These are literally like the main three concepts that I use. And I'm going to go over them, like I said, so you guys understand and can see it with your eyes, basically how all of these setups look. These setups all share the same structure. A strong move prior followed by tight consolidation. That tightness is where pressure builds. When the price finally breaks out with volume, that's the opportunity for our entry, right? Now for day trading, it's literally the same exact thing, like the same exact strategy, but it's a different time frame, and we will go over that. So I want to talk about these consolidation periods and these styles of consolidation areas, whatever you want to call it, right? So let's look at a bull flag right here, and I'm literally going to draw it on the screen, so make sure you guys are looking at this. A bull flag is simply a big move up on a stock, right? Stock makes higher lows, higher highs, higher lows, higher highs, and it goes up, right? Stocks move up. What a bull flag is when it goes up and then it makes lower highs and higher lows and goes sideways. This is a flag, just like the American flag. Here's the flag, here's the pole. You guys get it? That's a bull flag right there. Why it's called a bull flag is because it's in a bullish sentiment. What that means is the stock is rising, it's going higher. What a bear flag is when it's making lower highs and lower lows, and then it starts consolidating. This is a bear flag because it's in a downtrend. Then it wants to break back to the downside. See how it's a bear flag? It's like an upside down flag. Hopefully that makes sense. This is a bear flag. This is a bull flag. With a bull flag, mainly is what I watch, right? I never really look at bear flags unless we're in a correction in the market, and the market is literally tanking to the downside, which is QQQ and SPY. That is the market to me. So if you ever hear me saying that, the market, if it's going down, I mean QQQ and SPY, because all individual stocks will trade with that. So when I'm looking for a bull flag, what are we looking for? Breakouts. We're looking for a breakout out of the consolidation level, which is obviously this resistance right here, right? You guys should know what resistance and support is if you've been trading. If you haven't been trading, I really recommend you to watch a beginner's like course or something, right? Simple. Resistance is when price is rejecting off of an area like this. This is resistance. Support is when price is bouncing off of a level and it's holding, right? So support is down here. Resistance is it's resisting to go higher. So you can see we have a lot of resistance over here, right? We want to see the stock break out of our bull flag and then for it to continue higher. And this is the exact level that we take it at close. We'll go over entries and everything. And then we take the leg higher. How simple is that? That's my whole strategy. Obviously, there's a little bit more to it, but it's that simple. I promise you. It's a stock breaks out, it goes higher or it doesn't, right? Now, let's say it starts to break out and it fakes out because that happens a lot. It literally happened to me on Friday. Right? Let's say you take it, your stop loss goes to low of day or low of resistance or low of support. Let's say it does something like this. Goes higher and then starts lacking momentum. This is where you cut your stop loss super short, which means you cut your loss quick and you say, all right, I'm out of the trade and I accept that there's a loss. Breakouts can fake out and it's very important to look for volume and momentum. The volume indicator is down here. You can seek the green volume and you can see when it's high compared to when you see it's low, right? You want to make sure you're taking breakouts when you do see high volume. Then you also want to see momentum. Momentum in the market is basically when price is making a very quick move. When it has a lot of volume, it has momentum, it's pushing quick. When you see price pushing above resistance quick, right? Let's say we have resistance. This is our breakout level. When you see it breaking over it, you don't want to take it if it's just doing this, right? Because it's showing you not a lot of volume. It's showing you chop. You want to see bang, a big move over resistance. You're taking it off of the close, off of a pullback, wherever it may be, and you're looking for the continuation. It's that simple. So I want to go over a couple setups in the market for a swing trading setup. Now, I want you guys to understand this. When I am swing trading, I'm swing trading on a daily time frame. When I'm swing trading, I look at the daily time frame, and that is what I'm basing my trades off of. I'm not swing trading off of a 1 hour, off of a 5 minute. I'm simply looking at the daily time frame technical analysis, and then I go down and do my top down analysis to find my entry, which means you go down to the time frames to find a better entry and to do your technical analysis. So we're gonna just wing it, right? I'm gonna literally find a random stock and just show you guys a breakout from like maybe a bull flag. I think NBIS had a good one maybe over here from a flag, or AMD maybe. I didn't plan this because I want to be super transparent with you guys and just show you, because trading's not perfect also, right? I'm not just going to have the perfect of the most perfect examples, because how's that going to help a trader? Because trading is not perfect. I can promise you guys that. It's way harder than people make it look. So I don't want to just show you guys the most perfect setups, because then when you get into it, you're like, oh, it's not that easy, right? So let's just look at AMD right here, right? This is on a daily time frame, mind you. You see the consolidation right here, right? Look, this is on a daily time frame. I like to just draw a box. Look at this box right here. What a box is, when you're trading in a box, that means you're trading in consolidation. Consolidation is when a stock moves sideways. It's not moving up, nor it's moving down. You can see it's going sideways and sideways and sideways. This day right here, the stock broke out. Now, as swing traders, we hold our trades overnight and we're looking for moves within the next couple days to the next couple weeks, even to the next couple months, depending on how long we want to hold it and what our thesis of the trade is. So you can see this day would have been our entry. Let's remove this. And obviously our breakout line is where? On these highs. You can see we have a high right here and a high right here. I would look at over this high. Once we get over that high, that level of rejection, that is exactly when, obviously, we would want to see the stock go higher. Let's go down to find an entry on this. So you can see AMD right here, right? Market opens at 9:30 right here. Huge volume. Look at this volume right there. Absolutely insane. And that's exactly what you want to look at for a continuation, right? It's very, very important. You want to see volume. It's very important to realize that. And if you are not looking at volume, you're not going to make money, right? A lot of people will see a breakout level like this green line. Mind you, this is our breakout level. And this is top-down analysis, guys. I want to explain this in depth. It might sound confusing, but I want to go like in depth so you guys understand. What top-down analysis is when you start on a daily time frame, guys, right? You see the breakout, you see this day it's breaking out of this level, but you need to go to the lower time frames to end up finding your entry. So that's when you can go to like the 1 hour, okay, looks really good. Go to the 30-minute, a lot of volume. Usually me, I'm looking at the 5-minute time frame, right? Is that just a tight range? Yes, Juice. This is a tight range. This isn't a bull flag. I wasn't able to find one super quick, so I went for a tight range. This is what a tight range looks like, guys. You see on the daily time frame, it's literally a box, like I said. And this is exactly what you want to look for when you are looking at whether it's a range, whether it's a bull flag, a wedge. We'll go over all of them. But you can see this is just a tight range and a box of consolidation. So we go down to that 5-minute time frame, and you can see, super simple, right? We see the huge move right over breakout level. Now, usually a lot of my entries are off of the closure, right? So right there. But if our stop loss was at low of day, we probably would have gotten wicked out and stopped out for it to rally. And that's a very, you know what I mean, crappy situation to be in. So what you guys can do is either take it off of the break as it's breaking, like right here. You can take it on the closure. Sometimes the closure is going to be a little bit too high and you're going to get a bad risk to reward. But sometimes you take it right here and you can move your stop loss to like the bottom of the opening range gap, whatever it may be, and however much you're willing to risk. And you can see it pulled back. You could have gotten an entry off of the moving averages, whatever it might have been. And you can see the stock ripped, right? And then it closed right here. The next day, it opened even higher and kept ripping. Made higher lows and higher highs, and you can see the stock just kept running and kept running. This is easily over a 100 to 500% trade, depending on your expiration, and that's a really good swing trade. That means that if you put, let's say, $1,000 into that trade, you can easily turn that $1,000 into over $3,000. When I tell you put $1,000 into this trade, if you let it run to 300%, you're making $3,000. That's being said if you didn't trim any of your position. But it shows you the risk to reward to these swing trades are insane. Even if you put $50 in there, you could have turned $50 on this trade into at least over $300. And how much would you have been risking, right? Because that's a very big concept. If you're going to make, let's say, $300 off of that, how much would you have been risking if you got stopped out at low of day? $50 minus, let's say, negative 25%. Guys, you're barely losing money. You're losing 10 to 15 bucks on a trade like that to then make 300. And it's literally so less volatile than just day trading, early expirations, or even futures, how it's very volatile. It's not that volatile, and it's way easier to control with your emotions. So if anybody in here even is trading and you're not a beginner and you've been trading, and if you have a hard time with your emotions, I can promise you swing trading with later out expirations will help you with your emotions so much, simply because it's not that volatile. It's not like you're going to enter, it's going to go up 5 fucking cents and it's like, oh my gosh, like I'm up 20%, and then if it goes down 10 cents, I'm down 20%. Nah, man, it moves super slow. So it's very important to, you know what I mean, take these later out expirations so you can ease your mind, right? Set limit orders and walk away. Yeah, you can do that. Exactly. How far do you go out when picking an expiration? Usually it really depends on my thesis, right? So there's some times where I'll pick a weekly expiration. Really depends if I want that quick move or if I'm very confident on the setup. Let's say Tesla. Tesla is one of my main watches for this upcoming week. Literally tomorrow. Like if this breaks, I'm probably going to take this with like a month out, maybe 3 weeks, 2 months. Who knows? I haven't checked the contracts yet. But I believe that Tesla will move to 500 after that all-time highs breakout, and 550 super, super quick. And that's why you want to hold it more longer, right? You don't want to sit there with a weekly expiration and, oh, I made 200%, but then it expires, right? You want to hold it as long as possible and as long as the stock is holding the moving averages, right? So like I said before, you guys saw that that range breakout. We're either looking at a flag like that or we're looking at a wedge pop as well. I want to show you guys a wedge pop, right? What a wedge pop is when a stock is most likely falling, right? Whether that's from an uptrend or even in a downtrend, totally. Let's say we're in an uptrend, right? And then the stock starts falling, right? It makes lower highs, lower lows, and then it starts consolidating. It kind of bottoms out right here and holds some support. This is what a wedge is. After a downtrend, you'll see a falling wedge like this. And what we're looking for is a wedge pop. You're looking for a pop out of that wedge. That will be your entry, and then you're looking for higher lows, higher highs, and then that is the move that you catch, and that's how you make money off of a wedge pop. And what do you target? You target these highs back right up here, right? Really good risk to reward, amazing risk to reward, right? Let's go over ASTS. Exactly, Anthony. Thank you for saying that, for reminding me about that. Let's go to the daily time frame. This was my biggest trade last week, almost 400% I caught. Doesn't this literally look exactly like the drawing? Mind you, I'm still in this stock and I still have not sold it. Yes, I've trimmed. I made a lot of money on it. I've already made like $4 grand on this, but I still have one contract left. Why? Because it's holding the key moving averages. We'll go over those soon, but there's no reason for me to sell this. It's literally making higher highs and just going higher. The stock popped out of this wedge. No reason for me to sell it. Made a lot of money on this. This was a great trade. I also made about 400% on the stock Rivian a couple weeks ago. I made 300% on Meta. There were some pretty good names that went far. And then there was names that I lost on, like Apple, like Nvidia, right? But those losses are 20 to 30%, and I'm making 400%, guys. Get that through your mind, right? If you put $100 into a stock and you lose 20%, you lose 20 bucks. You put $100 into a stock, it goes 400%. You're making up towards 300 to 400 bucks. How crazy is that? The risk to reward is insane. You can make 300 to upwards of 400 bucks from risking $20. It's literally like, I'd rather do this any day than sports bet or like, you know what I mean? Like even do anything else. Like this is probably one of the best risk to reward type of concepts that you can do. Is it easy? Absolutely not. It takes time. But over time, the risk to reward is insane as well. It grants you freedom in life. You can do anything you want. You can work from wherever you want. Like, dude, like trading is, I promise you, nobody can really tell me a better job. If you can, then shit. But I genuinely don't think there's any better job than trading. I've made money, so much money in the Bahamas. The market was actually good. I went on a trip to the Bahamas and I'm making a shit ton of money from my laptop in the hotel room, and then I go out to the beach, and it's just an amazing feeling being able to do whatever you want when you want. You wake up in the morning, you get a coffee, you trade, then you get freaking hype, go to the gym, and then you got the whole day. Like sometimes it's kind of bad because I have too much time on my hands to the point where I get bored, right? So that should be everyone's literal like job, to try to get to that point, to the point where you get so bored because you have so much time, right? Hopefully that makes sense. But I want to go over ASTS right here, right? You can see we went in a huge uptrend right here. Huge uptrend. What happens? We start to make lower highs and lower lows. That means that we start going into a downtrend now. What happens after this downtrend starts trending a little bit too down? Makes a bottom right here. Then you see it starts bouncing, makes lower highs, and then what happens? Bang, pops out of the wedge, and you can see, look at this consolidation, right? Hopefully you guys are getting what I'm putting down, right? See how the stock is moving lower, moves lower, consolidates, pops, goes right back to highs. Where is our entry? This day right here, as it pops and as it gets over the moving averages. So let's go to a 5-minute time frame. I remember exactly where my entry was. It was right here as we get above our level. Now, where is our level? Either that previous day high over here or the day before, wherever the resistance is. You need to spot the resistance. Where do we see resistance? Let's go to a 1-hour time frame on this. Right here, this high. You see how we rejected right here, went back down, then we made support. Now we're testing this rejection level again. I took it right here as it was breaking over on a 5-minute time frame. So you can see, if I zoom in right here, look at my entry, right? So obviously you're not going to always see a huge move with volume and a straight green candle up every single time. But I saw we started getting some volume right here. We got over my level. That's where I took it. I was up a little bit, and then it broke to the downside, right? Now, a lot of people are going to panic right here, but there's no reason to panic unless it hits your stop loss. Make sure you are sticking to your stop loss and not going against it. It's that easy, right? A lot of people are going to get scared. They're going to be down 10%, maybe even 15%, and they're going to be like, oh, should I sell this? No, there's no reason. Yeah, it got a little bit below the level, but like, dude, did it hit your stop loss back down their support? No. So what happened? It bounced, and luckily, not luckily, systematically, I held it because it did not stop me out, and then look what it did. The stock literally did a absolute rocket ship, made me and all of my students a fuck ton of money, and we absolutely ripped this trade. And then what happened? After it made a big move up, it went sideways again, and then broke out again and made us even more money. And we hold this the whole entire time. So you don't take it above the trend line, you take it over previous day high. Yes, Isaiah, a lot of the times I will take it above previous day high because previous day high is always a huge level of rejections. And that's very important to realize. A lot of people are only going to look at the trend line sometimes, and they're not going to see the rejections, right? Like they're going to try to take it all the way down here as it's breaking, but like they don't see these huge levels of rejection. So it's always very important for you to wait a couple extra seconds, a couple extra minutes or hours to, you know what I mean, take a trade. Very, very important. So hopefully you guys see this ASTS wedge pop. That was a very good setup. I also want to go over Rivian, right? This is another stock. I actually just bought this on Friday. It's having a huge base breakout on the monthly time frame. So holding this more of like a long-term trade. I want to see this continue up until like $24. But you can see, look at the base right here. Huge base. It's starting to break out. I took this in my premium literally on Friday. We're in a little bit of drawdown right now, but we'll see how it opens and we'll see if it plays. But yeah, I want to go over Rivian all the way down here. Let's go into replay mode on this stock. And you can see the wedge down here, right? Stock makes a big upside move right here, pulls back to the key moving averages, and then gets tight, goes sideways. Look at the wedge right there. Let's draw our trend lines, and you can see on this day we popped out of the wedge. I took this stock on this day, and I held it all the way up until these highs almost, like I'd say around right here on, what was my, yep, expiration was on Friday. So like this day right up there. Held it all the way to these highs, right? Stop loss, obviously, right at low of day, super simple. Very good risk to reward. I'm risking little to nothing to make a shit ton of money. I made 400% on that. Beautiful trade, beautiful wedge pop. Super simple. Now, let's get into the next part of this. Not every stock qualifies to trade. I'm very selective with what I put on my watch list and what I trade. I want stocks that are already proving me that they're going to move. I'm not going to trade the stock like GameStop, right? People are going to be like, yo, we should trade GameStop. No, it doesn't move anymore, right? Why would we trade the stock CVS or any of these random stocks that barely move and don't have a lot of investors investing into it, right? You want to trade the stocks that move a lot, that move with big moves and that go crazy, right? Because that's how we're able to make a lot of money. And what you want to look for is ADR on a stock. What that means is average daily range. So every stock has an ADR. Right? An ADR, like I said, average daily range of what the stock moves on a percentage basis. That means if Tesla has a 5% ADR, what does that mean? On the normal, Tesla moves about 5% per day, every single day. So if a stock moves 5% in a day, imagine how much the options can move, right? So you want to trade the stocks that have at least over a 2 to 3% ADR. Right? Very important. And the stock should be above the 200-day moving average. What the 200-day moving average is, it's a long-term key support level. So if we go on the stock, let's just say AMD, right? And we go on a daily time frame. Let me turn on my 200-day, which is this blue line. What does that mean? When the stock price is above the 200-day moving average, that means that the stock is in bullish action, right? It's going higher. What happens when it's below the 200-day moving average? The stock is absolutely going to the gutter, and there is no reason to take a breakout trade on this, nor a swing trade, right? No reason. Once it gets back above the 200, you can see it sets up, breaks out, starts to move higher. Insane moves, and keeps going higher and higher and higher. So make sure you guys are adding the 200-day moving average to your charts. And then, like I said, I look for the average daily range to be at least above 3% most of the time. If a stock has about a 1 to 2% ADR, I'll day trade it, but I will not swing trade it because it does not usually make a move overnight if it does have a lower ADR. If the stock doesn't move, there's not really a lot of opportunity. Clean charts matter, clear levels matter, relative strength matters as well. I want the market to be in my favor, and I want to trade the names that are doing good, right? Now, what is relative strength? Relative strength means when a stock is holding up compared to the overall market being down. That's also another good thing. If you see a stock that's making a move up, like let's give an example. Look at my watch list over here. What a watch list is your stock watch list, right? Look at the whole entire market. But then you see Tesla up 2 to 3% at close. This is a stock that you want to trade because it has strength at close. That's very important. You can see it literally was up 2% at close while the whole market is red. That's a stock that you want to be swinging and that you want to be holding. Very, very important. I keep my indicators minimal, which means I don't just trade a bunch of random stuff, right? Like I'm not just like putting 30 different indicators on my charts because I want to look cool or I need a bunch of like conviction on the trade. I'm not trading inversion, fair value gap, liquidity sweep, SMT with an eval account, fucking all that crazy stuff, right? Is it bad? No, if you trade that and you make money, good for you. I love that for you, man. But I do think that there is a lot of complex strategies out there. A lot of strategies that are going to make you more emotional than you need to be. And I think breakout trading and trading these simple concepts will make you so much money when you can become disciplined with them, when you can back test them, and when you can adapt to the markets and understand everything that goes on. Because I promise you, there's not too many emotions attached to breakouts. It breaks out or it doesn't. Once you can build that discipline and that emotional status that you have while you're in a trade, you'll be so good with your trading once your emotions are good. So hopefully you understand that. Now, the main moving averages that I use are the 10 and the 20 EMA, like we were talking about, right? Those are the moving averages. Those are my key support levels intraday and when I'm basically just looking at the market, right? It's like a key support, key resistance. We were just talking about that, right? So I use the 10 EMA and the 20 EMA. What I care about is if price is reacting to them, whether we're in an uptrend or a downtrend, right? You want to see the stock holding the 10 and the 20 EMA. That usually tells me that institutions are supporting the move. When price starts losing those levels, which is the 10 and the 20 EMA, that's informative too, and that shows you that we're in a downtrend. So let's look at just Tesla for an example. Let me remove this 200 EMA. Look at Tesla, right? You see it's making an upside move right here. We're going to start from right here. Look at the green and the red lines on my charts. These are the 10 and the 20 moving averages. The green is the 10, the red is the 20. You see it's making a move up, and what happens? It supports the level, breaks out of a wedge, right? This is literally an entry right here. Creates a wedge right here, breaks out, and then swings. You would have made a lot of money, right? A lot of money. Rivian Rippy overnight? Why'd you say that, dude? You're messing up my class. You got me hype. No, I'm just kidding, Nick. That's good. We're in that trade, boys. Let's go. Don't tell me the number yet. I don't want to get too hype. I might start freaking dancing over here. But shit, at least I know. This is why we love swing trading as well, boys. I'm making money without having to do anything right now. I'm making money, and I don't even know it, right? That's why also we love swing trading, because it's not too emotional. You don't have to be right every single day. You let your trades ride. Look, we're making fucking money. It is exactly, KJ. It's not the same. That's why I don't really look at them and I don't get too hype. But it's up 2%, cool. All I want to see is that continuation. But that's why we love swing trading, because when it does gap up, it's always a good feeling, especially in the morning. I don't really look at it overnight too much. I look at it in the morning at like 7 to 8 a.m. But to go back to this, you can see price supports these levels, which is the 10 and the 20, makes a move higher. Supports it again, goes higher. Loses the levels, then it goes lower. So we look at the moving averages every single day in order to watch price, in order to trade, all of that good stuff, right? If we see a stock moving up right here, and let's say this is the moving averages right here, you want to see it tighten up on that stock, or on the moving average, excuse me. You want to see the stock tighten up on the moving average. This down here is the moving average, right? This is the stock. You see the stock tighten up on it, creates a nice wedge, creates a base or a flag, whatever the pattern may be, breaks out, right? That means that it's bouncing off of the moving averages, and that's always a really, really good thing. You never want to see it getting weak below the moving averages, right? Now, if we go back to Tesla in that situation that I was showing you guys, where was that at? I forget, but let's just show this breakout right here. You see how we get above the moving averages right here? We're under them, lacking volume, not a good setup. Gets above it, have a lot of resistance right here. You see it consolidates right on this 10 EMA. Bang, breaks out, absolutely rips the next 10 days, and you'll be holding that the whole entire time. So that's a really good trade. That's a really good setup to watch. Hopefully you guys are understanding those breakouts. Now, I want to go over my entries, right? Entries are based on structure. It's very, very simple. We're not entering because of random indicators. We're not entering because we feel like it or we think the stock is going to just move. We enter off of structure and we enter off of a systematic approach every single time. I'm looking for clear resistance, tight price action, riding on the moving averages. I want to see the volume slow down. I want to see it consolidate, and then bang, I want to see it break out. I went through the concept with you guys, right? Very, very simple. I showed it on charts, showed it on lines, right? You see a big upside move. You want to see volume. You want to see the price pull back into the moving averages. You want to get it tight. Bang, breakout. Very, very simple. You want it to get tight. You want it to break out. Super, super simple, guys. Like I'm showing you, it is so simple. Especially when you start to do it a little while. Let's say, you know what I mean, you haven't really been trading that much. Let's say that you're kind of new to the strategy, whatever it may be, and you kind of think it's still confusing. Dude, do this for one more week. You're going to be like, oh my gosh, like this is just so simple, right? Simple sells, fancy fails. Keep it simple. Keep doing everything simple, because when you keep it simple, that's where the money is made. It's not made in anything complex. What moving averages do you use? I use the 10 and the 20 EMA. 10 and the 20 EMA. So after that consolidation area and after the breakout, you know what I mean? I'm looking at the 1 to 5 minute time frame for the entry. We went over that, right? I'm looking at either a 1 minute candle close, right? You can look at a 1 minute candle close, or you can look at a 5 minute candle close, or there's another entry that you can use that I have been liking recently. It's after the 5 minute candle closes, you'll look for a pullback, right? So let's just give an example on this stock. Let's just go on a random stock, right? We're going to find it. We're going to back test together and literally find all of these entries. It's very important to be very transparent with trading and not to just find all this perfect stuff, because like I said before, guys, nothing is perfect in trading. So let's look at Nevis right here. You can see huge level, huge base, gaps up, starts ripping above that. Let's go to the 5 minute time frame. Let's find an entry. Okay, well, this is actually an entry where you would have entered on the close, right? You see market opens. This is the opening range right here. 9:30 open, absolutely rips. Where can you take it? Either on a 1 minute close, which would have been, let's see, right here. First 1 minute candle closes literally right above it. Bang. Or you could have entered on this candle close or whatever, right? As it's getting volume, stop loss goes back in the lows. Or look at the 5 minute, and you enter on the 5 minute close all the way up here. Or, like I said, that second or third entry is after the 5 minute candle closes. A lot of the times you'll see a pullback to the key moving averages. Remember, this is a short-term key support level or resistance if we're in a downtrend. You see that we're obviously in an uptrend because Nevis is breaking out. What happens? Makes a big upside move and ends up breaking out. You can see it pull back to the 5 minute, 10 and the 20 EMA. That could be your entry. And then what happens? Your risk to reward is better because you're not entering so high at the top, which even right here is not a bad entry at all, right? A lot of people, like all of my students still enter on 5 minute closes. But if you do want to wait and stay a little patient, and if you're not confident at the highs and you don't want to take it all the way up here, wait for a pullback, look for a bounce. If it loses the moving averages, you cut your stop loss so quick, guys. Like I'm telling you, it's literally ridiculous about like the risk to reward. You would cut your trade if it loses this the EMAs, and look how much you would have already made. It already is at a 1 to 7 risk to reward, and it still kept going higher, I'm pretty sure. Who knows? But it's just an insane risk to reward, right? So that's usually the entries that I'm looking at. This the setup looks sloppy. I skip it, right? If there's a lot of like bad consolidation and it doesn't look that good, I'm skipping it and I'm just not worrying about it, because you want to make sure that it looks like almost perfect. You want the setup to be screaming at you, and that's very important, right? You want the setup to literally say, Johnny, like, get in this now. Like, this looks so good, right? How important is it to wait for a retest? It really depends, Ash. It depends how high the stock is. Is it super, super extended from the moving averages? You know what I mean? It really depends on how far it is away from breakout level, because there's times where a stock will break out like this and it'll literally, like, the 5 minute will close so high all the way up there. It'll be the biggest 5 minute candle ever. And you don't want to enter at a top. So that's why it's very important to catch it literally right as it's breaking out. So that would be on a 1 minute time frame. But one thing that you guys need to understand, the 1 minute time frame does have a more of a fail rate, right? You'll see it start breaking, you'll see it break on the 1 minute, and then the 5 minute will fail and it'll just go right back into the range and you'll get stopped out. And that's a part of trading, right? You have to accept that. And it's all about just your conviction. Like, I've taken 1 minute breaks and it's the best, right? Because you get the best risk to reward, you're getting in very early and you get to catch the whole entire move. But then there's also times where you catch it as soon as market opens and then it's you with a little fake out right away. And then, you know what I mean, you'll take a loss on a morning in the first 2 minutes, which there's nothing wrong with. It happens. Stocks fake out. It's all about just building conviction and seeing the volume, right? You can see Nebus right here off of this breakout. Mind you, the breakout is the white line. Market opened right here. Absolutely ripped over it. You can take it anywhere around here, and you would have made money on that swing trade. Now let's go back to the daily time frame and look at it again. See the base, right? You see it rejecting a lot up here. Rejection, rejection, rejection. Starts to get back higher. Let's see if it rejects again. Psych. Got right above it. Didn't reject again. That's a good sign. That means it's breaking out and it's going higher. Now, why is this setup bound to break out more than any other setup? Because it's in an uptrend, right? Look at this. It's not just coming off of like a downtrend. The wedge pops are still great, but when you see the stock make a prior move up, go sideways, and then break out. Remember, we were just literally talking about this. This is a straight up bull flag. Remember, we were literally just talking about that. Look how perfect that is. You're taking that swing trade. The next 4 days, it absolutely rips. And then what happens? It ends up failing the moving averages. That's when you would get out, or one of these days. And you would hold it. And you can scale out whenever you want or at certain levels, depending on like how much your percentage is up or down. Whatever. Yeah, cup and handle patterns, they're really good as well. Exactly. Now, the same strategy that we just went over for swing trading works for day trading as well. I want to talk about day trading because some people don't like swing trading. Some people like day trading. Some people like doing both. Me personally, I like doing both. I'm not biased, right? I'm not just a swing trader. I'm not just a day trader. I invest, I day trade, and I swing trade. But most of the time, I'm just swing trading and investing. But if I do see a good opportunity for a quick day trade, I'll take it, right? If it makes sense, I'll be lighter size, whatever it may be. I like to day trade, and these breakouts actually work really, really, really good for day traders, like insanely good. So that's something that you need to pay attention to. It's literally the same exact concepts, but on a lower time frame, and I'm going to go over that. With day trading, you want to work with intraday charts, smaller size usually because it's a little bit more volatile, and you have to have way like quicker decisions, right? You have to have quick decisions. You have to have faster exits. The goal is to be consistent, not to hit crazy home runs. With swing trading, you're looking for home runs, right? You're looking for big moves over the next week to 2 weeks. With day trading, you just want to stay consistent, take those base hits, get in, get out, walk away. Way too many people are emotional when they're day trading, and that's exactly why most day traders fail. Swing traders have a more of a success rate than day traders, I can promise you that. So I want to go over a couple of the charts. I have them right here on the stock Amazon. I actually was going to take it. I think a couple of my students ended up taking this stock. I actually missed it, so I didn't chase it. And I let it go, and it is what it is, right? So let's go right here. We look at Amazon, and you can obviously see, what type of pattern is this, guys? Do you know this pattern? It's a what? What is this? Super simple. It's a wedge, yeah. Okay, one person said it. Cool. It's a wedge, right? You can see it's making lower highs, higher lows, building support down here, building resistance. It's a wedge pop. You see it starts consolidating. You see market opens right here. And then what happens? It absolutely rips. So let's go over here to a 5-minute time frame. This is very important for entries, right? You see the 5-minute close, you could have literally entered right there, right? So if we use the pen, you could have entered right here as it's breaking, or you could have entered on the close. Look, and there was no pullback. Sometimes you're not going to get pullbacks to the moving averages, and it's just going to keep going higher. So you can see the opening range break was right here, ended up breaking this level, started ripping. You can take it literally right at open or on the close or on the 1 minute close. Remember, it's literally all the same thing. It's really just that opening range break. Once you see it getting over your level with volume, take it. Your stop loss goes where? Low of day. What is low of day? Super simple, right? The lowest point of that day. This is the first candle open, right? So what is the lowest point of the day? Right here, where it opened. So you see candle opened, pushed above resistance, you enter. If it pulls back and goes lower and closes below this level, you're out. It's super simple. It's a very simple concept. Guys, you don't need a bunch of indicators. Like I said, it's super simple. It breaks or it doesn't break. Keep it simple and you'll make a fuck ton of money. I can promise you that. A lot of my students made money on this. I called it out for them. I was telling them like, yo, Amazon is breaking, but I just missed my entry. So I didn't want to chase it. And when I'm not confident in a setup and if I see it keep ripping and ripping and ripping and I missed it, I don't want to get emotional. I don't want to be like, oh, I should have taken that. It is what it is, man. You're not going to hit all of them. You're going to miss some and you're going to like mess up on some. You're going to win some. It's all about just doing the right thing, staying unemotional, being systematic, and just not caring. It really is just about not caring. Like, I promise you, it really is. Just don't care. If it broke out and it ripped without you, it is what it is. Let it go. What time frames are you looking for the breakouts on day trading? I'm about to go over that right now, my boy. So we are going to be looking at the 1 hour time frames and a 30-minute time frame. These are my favorite time frames personally. You can add them to your chart. The 1 hour and the 30-minute time frame. Very, very important. Those are the best type of wedge pops, best setups for day trading in my opinion. And I want to go over a couple. We're actually going to look for some. And it's super, super simple, right? It's like literally very simple. We're going to go to a 1 hour time frame and let's go look at some stocks, right? We'll look at Apple and we'll look for a nice wedge pop. It's super simple. Like right here, let's look for a bull flag right here, right? You see stock makes a big move up, moves sideways, has a breakout level, breaks out, right? Now let's find an entry. Where is resistance, right? We're going to go put this line. It's going to be right at this red high right here. So let's zoom in. You can see Apple makes a big move up, moves sideways, has a lot of resistance. Here's the opening range candle at 9:30. So let's go to a 5-minute time frame to find our entry. Bang. Super, super simple. Guys, market opens where? Right here at 9:30. This red candlestick, it opens, rejects that level, pulls back. Okay, I didn't take it. Why wouldn't I take it? Because it never actually got above the level with volume. You see, the volume was there, but it never got above it and never showed us either a candle close or some momentum. So it rejects, and then it gets tight, and then boom, breaks over it. Your entry is literally right as it's breaking, on the close, on the pullback, whatever it may be, just as it's breaking. It's very simple. You can enter it on a 1 minute close, especially in a setup like this. Look at this breakout, guys. Like, this is actually ridiculous how profitable this is. Your stop loss goes right below the moving averages. That is over a 1 to 7 risk to reward. And if you're day trading this, guys, that's easily over 200%. Like, easily. Flat tops are my favorite. Absolutely, KJ. Flat tops are my number one favorite breakout setup. Like, even over wedge pops. I really like wedge pops, but the flat top setups are absolutely amazing. And why? Because they're so damn clear. So clear, right? If you go see a wedge pop, there's going to be times where it's like, oh, is it this high, this high, this high? With a flag, it's the same thing. You know what I mean? You're scared to see if it's this or this. A flat top is like this, guys. A big move up, and then it goes like this. Where is the confusion on the breakout level? Absolutely nowhere. And that's exactly what Apple did. Look at that setup. Absolutely beautiful. And where did we find that? On a 1 hour time frame. You can see, where's this at? Right over here. You can see the stock made a huge move up, move sideways, breakout higher. Very, very, very simple. Guys, I promise. Would you use 0 DTEs for day trades? No, I would not. I rarely trade 0 DTEs. If I trade 0 DTEs, it'll be on a Friday. That's the only time I would trade a 0 DTE. For day trading, I would probably trade 2 to 5 days out. Maybe not 5 days, probably like 2 to 3 days out. Not too volatile, not, you know what I mean, too slow. It's perfect. All right, here's another insane breakout. Look at Apple. You see a huge high up here. What do we see? Built resistance. What does that mean? That means that you can see it just gets tighter and tighter and a lot of consolidation. It's building a wedge. You guys see this wedge right here? Very, very simple concept. Like when I tell you this is like a fifth grader could learn this shit. Higher lows, lower highs. Higher lows, lower highs. Higher lows. What happens? Market opens. Let's go to a 5-minute time frame. Where does the market open? It gaps up. Okay, and this is where it opens. Where would we want to see this get above? Probably this high, right? It already is getting over that high. It gapped up above that. Absolutely starts ripping. Now, is this a good entry? Guys, do you think this is a good entry up here on that 5-minute candle close after the breakout? Would you guys take this after that close? Probably not, right? Naggy. No. Why? Because it's too high. And it literally just hit a level up here. So if the stock ripped and you were scared to enter it as it was breaking out at like 931, 932, 933, scratch it, go to the gym, pump some freaking pre-workout, and get off the charts or look for a different setup. It's that simple. You do not chase in the stock market. You will get humbled. Even though it ripped, guys, it's not going to do that all the time. This is a very bad entry, and sometimes you'll get stopped out. Even if it does want to go, it's very important to catch it right as it's breaking that level. Let's go to a 1-minute candle close entry. Look at that. How perfect is that? Stop loss goes right below the range. And you can see easy 4 to 1 risk to reward, or 1 to 4 risk to reward. And then does it even go higher? Look, you could have day traded that, but like even if you swung it, that shit just kept gapping up and gapping up. Look at that setup. It's absolutely ridiculous, the risk to reward on this. Let's go and see how it looked like on a daily time frame. And I'm not going to lie, it actually looked good on a daily time frame too. Like look at that consolidation. Got above the moving averages, swung. If you held it all the way up to here, that's a 1 to 19 risk to reward. Do you see how simple this is though, guys? It's either it breaks out or it doesn't. And then what happens? It keeps going higher. It's that simple. We'll go on another stock. Let's just go on this stock Run right here, right? Okay, beautiful setup, right? Run makes a big move up, starts pulling back, consolidates. We have a clear breakout level. Go to the 5-minute time frame over here. Let's see when the price opened, right? The stock is just stair-stepping up. Higher lows, higher highs. It's just stair-stepping the whole time. You want to catch every next leg up. So when we see the market opens right here, starts pushing above our level, you take this. Bang. Lots of volume. Stop loss goes to low of day. And you can see for the 90th example, absolute ripper, you would make a lot of money on that. Hopefully you guys are understanding these day trading concepts. A lot of these are going to be wedge pops. Some of them are going to be bull flags. It's very, very simple. Now, hopefully you guys understood that. I want to go into the risk management part of this. And this is if you have in between, let's say like a 1 to 5K account. This is a small options account, right? If you have a $1,000 account to like a 5K account, this is a small options account, and this is how you are going to have good risk parameters. This is how you're going to go about entering your trades, how to position size, how to, you know what I mean? What is my trade plan, etc. So let's get into this. The first thing is when you first start trading, right? Everyone wants to make money quick. Everyone wants to flip their small account, their last couple paychecks that they got from their job. They want to put it into Robinhood and they want to flip it and get fucking rich overnight. And if it was that easy, my grandma would be doing this shit and you'd never see people quit. Look at the fail rate for trading. Over 90% of traders fail. Why? Not because they suck, because they try to get rich quick. They try to flip their accounts quick, and they want to see that instant gratification. They want to see everything right away. They are not willing to sacrifice. They're not willing to compound, build, and just wait and stay patient. And that is the number one thing with day trading, with swing trading, and with options, and with investing. You have to stay patient. This is a compounding game. When you stay consistent and persistent, when it compounds, it fucking compounds, right? Like it really does. I'm not joking. So stay consistent. It's that simple. Everyone wants to flip their small accounts, but the truth is you have to treat this like it's already a big investment account. Your goal should be survival and consistency. If you got a 1 to 5K account, this is how you're going to have to manage it. Number 1, risk per trade. Keep your risk small. 2 to 3% max of your account you should be losing on the day. What does that mean? If you have a $1,000 account, that means you're risking $20 to $30 on the day. That is amazing. If you go into a trade and you only lose $30 on a 1K account, that means you have $970 in your account still. You're alive. You're surviving. You got tomorrow, right? And that's exactly how it is. You know what I mean? If you're risking 40 to 60 bucks on a $2,000 account, that's great. Now you got what? 1,900 and whatever. So it's very important to understand risk parameters are everything and risk management is everything. And you have to have low risk in order to actually stay profitable. Survival is the key. I promise you that. Now, if you have a $5,000 account, you want to risk in between 100 to 150 bucks per day on a loss. If the stop hits, you're still alive to trade again tomorrow and you're all good. What most traders do is they have a 1 to 2K account and they put fucking $800 into a trade. It's absolutely insanity. It's like you're putting your whole entire portfolio into one trade. What happens if that stock gaps down? What happens if you walk away and your phone dies? You're literally going to lose your whole entire account. Whole entire account. So it's very, very simple. Keep small risk in order to stay alive. You win big, you lose small. Super simple. The next thing is going to be position sizing. Position sizing is very important because you don't just want to put a random amount into the setup. You don't just want to just trade random stuff and just hope that it wins and just put a random amount in there, right? It's very important to actually do a little bit of math in this game. So with position sizing, you want to focus on 1 to 2 high quality setups. You want to calculate how much you're risking per contract and make sure it actually fits your plan. Example, right? You have a $3,000 account. If you put $300 in a trade and lose 25% of that position, you just lost 75 bucks, which is negative 2.5% of your account. That's amazing, right? If you're losing 75 bucks, that's actually pretty solid. You're not losing 300 bucks, 500 bucks. You're losing 75 bucks, right? And that's a very good stop loss on a 3K account because you're losing 2%. Now, if you would have went over a 1 to 2 risk to reward and you would have made 5 to 7% of your account, that means you're making up towards, you know what I mean? Let's do the math on that. What would that be? 120 to 170 bucks in between there. So very important to have small risk, like I said, right? If you have a $3,000 account, and I wanted to give an example because I think that's the perfect starting price to trade. 3 to 5K, start with that. That's amazing, right? You put 300 to 400 bucks in per trade. If you can lose 3% per day, which is about 75 bucks to 90 bucks, that's good. And then you should be making up towards 120 to 200. Number 3, we're going to go over trade count. Do not overtrade. It's that simple, bro. Don't overtrade. 2 to 3 trades max per week. If you're a swing trader, if you're a day trader, you can trade more, right? That's simple. But you do not need a lot of trades when you have a small account. This is what people get messed up on. Oh, I got to trade today. I got to trade tomorrow. I got to trade the next day. I got to trade 2 times per day. Guys, if you want to compound an account, it's not about trading more. It's about trading less. You're going to see, I have a bigger portfolio and I trade less than some guys that have $500 in their portfolio. That is the reason I'm able to stay profitable and I'm not able to die in this game because I don't just trade a shit ton of setups. I actually trade the setups that are good, not just random setups. So when you have a small account, don't focus on trading more. Focus on trading really good setups. They have to look so good to the point where it's all right, this is worth me putting in the small amount of money that I do have. Hopefully that makes sense. So don't take a shit ton of trades. You do not need to trade every single day and just keep it simple. Now, number 4 is compounding, right? You want to grow slow. 5 to 10% a week on a small account adds up crazy. We're looking at it in percentages. You're oh, that's not a lot. Guys, look at it in the long term, right? Zoom out. Everyone's so zoomed in their trading and in their life. They're oh my gosh, my life is so bad. I hate my job. This trading stuff isn't working out. Zoom out 3 years from now. Look how profitable you're going to be. Do that in your life. And that's what I did. And that helped me so much with my emotions when I was broke back then. I was fat as fuck. I was just not in the life that I should have been or wanted to be in, if that makes sense. I just did not like the person that I was. And it's always because I was so zoomed in. I had negative energy. I talked negative towards myself. And I just thought that this was going to last forever. But if you keep putting in work, you keep sizing right, you keep trading right, this is your life. Right? Zoom out, look at the bigger picture. I promise you, you'll get a lot more positive with your self-talk. It's just something random, but it truly helped me, guys. where was I at? Sorry. So yeah, compounding 5 to 10% a week. That means, you know what I mean? If you got a $500 account, you make 5-10%. That's great. Let it add up. You know what I mean? A+ setups, tight risks, repeat. Easy. Super, super easy, super simple. Now, the last thing is the reset rule. I actually just started thinking about this the past couple weeks, for even myself. If you lose 3 trades in a row, or even drop 10% of your account on a week or whatever, chill. Stop trading, take a day or 2 off, reset, let the market do its thing, journal, back test, get back into it, right? Small accounts and any accounts die from revenge trading, not just bad trades. People will trade, have a bad trade, and then they revenge trade. They get right back at it, and they're just like, oh, I need to make that money back, right? And that's exactly how you're going to lose and fail. Do not revenge trade. Take one trade and be okay with the outcome. It is very, very important to be okay with the outcome. The faster you learn to protect your small account, the faster it'll actually turn into a big account. Super simple. What is the best platform to start trading on as a beginner? I recommend Webull or Robinhood. Those are the 2 that I like. Everything is profitable if you manage risk. Absolutely. Can you show us the indicators you use? I use the 10 and the 20 EMA. So if you go to indicators right here, you're going to see moving average exponential. You're going to type that in. You're going to add 2 or even 3. You're going to add the 10, the 20, and the 200 exponential moving average. Is the long position trading tool view accurate? No, not how options contracts move, Luke. That's why I barely use it. Thinkorswim is good as well. Absolutely. Can you show us how to set a stop loss on Robinhood? I personally do not set my stop loss on Robinhood. I do everything manually, and I do it myself. If you would like to do that, it may be hard setting it with a certain price. I'm not going to lie. So if you're a big type of person on limit orders and you want to set orders, I would trade on Webull and trade on TradingView and connect it to TradingView. You can set limit orders like that. Do you guys understand my strategy though? It's been an hour and 2 minutes so far since I started this recording. Have I explained this good? And be completely honest with me. If I've explained this like shit, tell me. I want you guys to truly understand my strategy and how we can make some fucking money. All jokes aside. Yes? Okay. I appreciate that. So solid? Sounds good. Thank you, Nick. Is this recorded? Yes. Only profitable because of this strat? Good, man. Keep pushing. Great explanations. That's what I needed to hear. Thank you. Because sometimes I feel like I don't explain stuff good and people don't understand what I'm talking about. But that makes me comfortable. Thank you, bro. Love it. I love the feedback and I appreciate a lot of you guys. I'm going to put this in the YouTube video. Spam W's if you're going to get fucking rich in 2025. Let's see it. I'm not even joking, too. I'm not even on no corny shit. Yeah, spam W's in the chat, guys. Dead ass. If you actually believe that you're going to make it in 2026 to 2028, give yourself 2 years. But, it's not just going to actually work out if you just try for 3 months, right? It's actually going to be a thing. It's going to become reality when you actually do it for a long period of time. You have to lock the fuck in. Every one of you guys in here, all 200 of you guys. It started out with 300 people in here, right? 300 people. There's only 200 in here now. You can obviously see people are eating pizza, watching football, drinking a beer with their bank accounts under $1,000. Don't be that guy. Lock the fuck in and let's make some fucking money. It's that simple. It's literally that simple. Let's make money. Not tomorrow, not next week, not fucking next year. Let's make money within the next 5 years. Believe in yourself within the next 5 years that you're going to make money. Believe in yourself that you're going to get better as a person. You're going to quit bad habits. You're going to become the best version of yourselves, right? There's a lot of people that left. It's because they're lazy. They have a fucking skittle brain. That's what I like to call it. And I'm just keeping it 100, right? People have skittle brains. What does that mean? They have low attention spans. They don't even watch a 7-second reel till the end. They skip it when it's at 3 seconds. Don't we all sometimes? But most people are worse than others. Just being completely honest. Don't have a low attention span. Pay attention to stuff. Read books and read podcasts. Go to this thing right here. Look at this. This is all free. I take a lot of my time to put all this shit in here. Education. I put plenty of videos that have changed my whole entire life in here. Education, books and podcasts. This is great. The whole Discord is great. This is amazing. This is all free right here too. These books and podcasts. Go in here. I promise you. And then also, if you haven't watched my free trading course, check that out, please. Lock in with that. It's going to be amazing. We're going to lock in this year. And it's super simple. Right? It's almost 2026. Not going to lie. This year came very, very quick. It was a great year, a great learning year, a great year to make money. We had the Boca Mastermind. That shit was amazing, right? Now, in 2026, the market will still be here. The market is going to be here in 2026. The opportunities will still be here in 2026. I'm dead ass, guys. The only question is, will you be here in 2026? Will you be putting work in every single day? Will you be different, and will you actually change? Most people don't fail because they just can't learn. They fail because they delay everything. Oh, I'm going to do it next month. I'll try it next year. Man, maybe when I'm done my job. Maybe next when I get my stimulus check. Maybe when I get more money. Meanwhile, time keeps fucking moving and time is ticking. Time is ticking and you're just living the same life that you have been living all year. And you're never going to change if you don't change your habits, if you don't actually journal every single setup, if you don't pay attention to everything in here. Now, the next thing, this hit hard for me. Doing nothing feels safe, right? Doing the same comfy things every day. You wake up, you go to your job, you hit the gym half-assed, then you eat probably, you chill, you sleep, and you repeat. The same thing over and over and over and over again every single day. Now, is that a bad life? Absolutely not. There is absolutely nothing wrong with working a 9-to-5 and doing regular things. And I'm the only individual on social media that will actually say that. Because all of these other influencers are going to be like, fuck 9-to-5s. You're a fucking Matrix bot if you work a 9-to-5. And that shit's corny. I don't know if you guys think that's corny, but me personally, I'm someone that makes a lot of money, and I think that's corny. There's absolutely nothing wrong with being a normal person working a regular job. But let's switch it up real quick right here. Do I want to live like that? Fuck no, I don't want to live like that. Do you guys want to live like that? Fuck no, you don't want to live like that. Is there anything wrong with it? Absolutely not. But me personally, I like freedom, right? So this right here, doing nothing feels safe. What that means is like just doing the same thing over and over and over again. It feels good. It feels comfy. You already know that you have fucking $597 in your paycheck by the end of the week. You know it. You're good, bro. All you gotta do is show up. It's safe. Staying the same costs way more than trying, though. And that's one thing that I stand by. Dude, it's more riskier not taking a risk than taking a risk. Like, all jokes aside. Like, it is more riskier staying the same than even trying. Most people don't try. So I challenge you, deadass, every single one of you guys, make a difference this year. Like, no corny shit. Make a difference. Do something different. Not January 1st, bro. Don't be a fat ass and get a gym membership January 1st and start now. Nah, bro. Get ahead of everybody. Because you're going to have the fatties and the motivated people that start on January 1st or December 31st. Like, new year, new me. That's some corny shit. Like, let's just be completely honest. That new year, new me shit is corny. That shit that's not even a thing. It's none of that. Don't even say that shit. Because you're going to get into it and you're going to be like, oh, like, you're going to get motivated for 2 weeks and then bang. Like, dude, like, come on. You know what I mean? It's like, just actually lock in and get after it. Who cares about January 1st or December 10th? It's a fucking day. Days aren't even real if we're keeping it 100. Days are not real. We're just living in a life until it's over. And it's just like, just do it now instead of delaying everything. Not next year, not next month, not tomorrow. Now, bruh. Like, even rewatch the fucking strategy in 20 minutes. Like, just start now and, like, get on a routine. Get on a schedule. Get on something that's going to help you out. Change your routine. Read more books. Watch podcasts. Quit bad habits and change your friend group if they are bringing you down. Very simple. Do what you have to do. Even if it doesn't feel right. Even if it's getting away from those friends. Right? Because that was my biggest problem, is having bad habits, right? I was smoking and I was drinking and I didn't have a good routine. And I just wasn't really just like, I wasn't in the best shape of my life. I changed, and that's why my life changed. And everyone in this freaking chat, if you've been following me, you've seen how I've changed. I've documented my whole entire journey. I've shared my whole story. You guys see, this isn't some fucking fake shit where I'm a TikTok trader trading on a funded account, like answering questions, right? Like I've tracked my whole entire journey. If I can do this shit, I'm a normal ass person. I promise you, you can too. Like I'm not even saying that on no like I even hate saying that if I'm being honest. You know what I mean? I'm just being completely honest. Like, oh, if I did it, you can. Everyone says that, bro. But like all jokes aside, like it's so possible for anyone to be profitable in the stock market. You just have to truly stay at it. Like not even on no motivational shit. Just stay at it, bro. Just keep going even when it's hard, because that's where everyone quits. That's the 99% of, you know what I mean, the failures in this. It's super simple. And that's really all I got for you guys. So, do you mind? Does anybody mind if I give a prayer for all 200 people in here for 2026? Let's run it up. 2026 is going to be a great year. God, thank you for giving all of us a great year in 2025. Thank you for teaching us new things. Thank you for helping us with all of the valuable skills. Thank you for changing our mindset, for bringing us around new people. Thank you for creating Boca Trading and bringing all of us like-minded individuals together. Thank you for our families, and thank you for what 2026 is going to bring towards us. Thank you for guiding us, and I'm just very thankful, God, that you've given me everything that I have. I'm thankful for every single person in this chat. Please bless everyone in this chat with success, with guidance. Amen. Let's have a fucking great year. Let's run this shit up, boys.